We're going to start with RCL Foods, okay? This one used to be called Rainbow Chicken. That's where the R and the C comes from. So it really is a major player in the chicken business. It was a business founded by a guy called Stanley Methvin, probably 70 or 80 years ago. It was the market leader. Some of the brands you might be familiar with, Farmer Brown, County Fair, that kind of thing. It has done significant reorganization apart from changing its name. It bought a business called Foodcorp. And then with its controlling parent being Remgro, it has acquired some of Remgro's food interests, in particular a business called TSB, which is in the sugar business, Transvaal Suikerbeperk. They had significant assets out in the Mpumalanga area and Swaziland. Remgro, which of course is a diversified industrial group most associated with the Rupert family, still has a very big interest in RCL, but it now has positioned itself with the combination with Foodcorp, with the combination of Rainbow and TSB, more as a diversified food producer with a little bit more of an expanded market potential because of its branded goods. So it owns things like Yum Yum peanut butter, Nola, and oils and all sorts of stuff like that, pie manufacturing operations. The market cap of this one is pretty substantial for a company that doesn't get talked about a lot, 16.3 billion rand. Price to earnings ratio looks deceptively high at 69.92. That's probably got to do with the after effects of the reconstruction of the business, and prior year comparisons are not all that easy. It's showing up as having a dividend yield of 0.85 on its previous numbers. Gerbrand, we own this one in our portfolio largely on your recommendation, because I like the thesis that because of the prior year comparisons, it's probably going to make more money than people expect, right?
Yeah, look, if you look at the first 6 months that they brought out, I think they made about 70% headline earnings or diluted headline earnings per share. If they can do that in the second half of the year, you're sitting with about a R1.40 or R1.50 earnings on a 17 Rand share, which is about 11.5 PE, which doesn't look expensive at all. For chicken business, probably yes, because some of the peers trade at about an 8 or 9 PE valuation, but this thing is diversified. You got about 30% of revenue coming from the chicken business, which is the Rainbow chicken business. You got 30% of revenue coming from the Foodcorp business, which is Sunbake milling businesses, Oma Biscuit, if you remember that.
Biscuit, yes.
Nola mayonnaise, there's a few nice brands in there as well. That's about 30%. 20% sugar revenue, which has been depressed over time. From a value perspective, you'd probably like some of that exposure at the moment, like a Tongaat or something. You get it in here. And then about 10% of Vector Logistics, which is
I've forgotten about that piece as well, yes.
Which is running very
smoothly. Used to be
smoothly.
part of AVI, and what they do is they move foodstuffs around. It's like a sort of semi-food surface, chilled, cold chain stuff.
Yes. So they deliver to most of the
and that's of course because with the relationship with people like KFC and so on, they
famous
need to
brands,
move all that
of
stuff
them are
around.
involved there. So I think that they're certainly going to do very well. And it's a bit of a diversified business. You get it at a discount against the pioneers and the tiger brands of the world, that chunk which is Foodcorp. And sugar is not expensive at the moment. And then of course you get some protein of choice in Africa, Rainbow exposure as well.
Yeah, so all of that adds up. I just want to go back to that conversation though about the earnings that you're expecting. So you were saying that you kind of calculated that they made 70 cents in the prior period, or was it that?
No,
that's
what they reported. So for the 6 months, I think the previous year was lots of distortion.
Yes, because the previous 6 months they didn't own some of the businesses we're talking about them owning now.
Certainly.
Yeah. Let's have a look at the graph. That's up there on screen. You can see it hasn't really done too much hard work for anyone, although that's some significant move from around 12 to around sort of 17, 18, and then it sags back a bit with the rest of the market. So when are we likely to see the catalyst for this? It's a June reporting period, right?
Yeah, hopefully so. But if you just from a value perspective, if you can find something in the market that's a 20p rated, you're getting it for 12, which is quality, then certainly, hopefully, you'll see some re-rating going forward. But you probably won't see the share price dropping off significantly as well if there's a sell-off continuing as we had over the last 2 weeks.
Issue also about market expectations and pricing is what is the percentage roughly that Remgro has of this company, because they're presumably not sellers. That means the price gets made in the marginal trade that happens outside of their holding.
I don't have that figure with me, but it's certainly in the major, it's like 60 or 70%.
Yeah, exactly.
And
because they owned 100% of TSB, and putting that in was quite a significant asset.
So free float won't be much,
and they funded a lot of the money to buy Foodcorp.
And liquidity won't be that big as well, but certainly from a valuation point of view,
Yeah.
they don't look too expensive.
Okay, so it sounds as though we're still hot on this one. We like its mix of businesses. It's diversified. It looks pretty cheap, etc., etc. Definitely hot for you.
Yes, certainly.
Excellent. Good.